I recommend for folks like do a flip, do a rental, do a flip, do a rental. Every time you do a flip, you'll make some amount of money, and you can use that capital as a down payment into a rental. And then the rentals have great tax benefits, so you kind of offset your tax base.
This episode brought to you by Suites at Madison. Meeting and conference rooms for rent by the hour, week, month, or year. Suites at Madison, where business gets done. Check them out at www.downtowntampaoffice.com. Now, on to the show.
You are listening to the Invest Florida Real Estate Show, covering topics in lending, buy and sell strategies, property management, hot markets, and tips and tools to guide you along the way on your path to real estate success. You want Florida investment real estate talk? You have come to the right place. And now, our hosts, Eric Odom and Steven Silverman.
Hello and welcome to another episode of the Invest Florida Real Estate Show. This is your co-host, Eric Odom, along with Steven Silverman. Steven, what's shaking?
So, Eric, we're in an interesting market. I mean, everywhere there's labor shortages. We have people buying properties and selling properties, but the service industry is really stretched out now. It's hard to get surveys done. It's hard to get environmental reports. Timing just taking forever to do anything for any kind of inspection.
Yeah, it's really interesting. And some of the costs that we've seen, not only from materials, but also from the labor side. I mean, almost a doubling from our roof contractors. And when we need another roofing contractors, it's just to $500 just to make an appearance in 5 minutes is just not tenable. It's a tough market, Steven, no doubt.
Well, it's an overheated market, and it is, everybody's trying to respond to it. And I think it's a time for people really to beware. So a lot of people are willing to pay those prices just to power through the process.
Yeah, no doubt. And we're going to be talking, we've talked about, it's been a theme that's popped up recently because it's so hot in the major markets, that Orlando and Tampa and South Florida, the South Florida market is so hot that people are looking for ways to go outside. So we talked about perhaps stretching outside of these major markets into more tertiary markets. And, we've got somebody on from Gainesville today, which I'm excited about. That's my alma mater, University of Florida. And, obviously it's changed a lot in the many years since I've been there. So I'm interested to hear what our speaker has to say about that today. Our guest has to say. But first wanted to read a review. And this is what makes the show go around, guys. It is very challenging for us to get guests on the show, and we want to make sure that we're providing something for them. And when they check us out, they want to see reviews, because that's the best way for them to be able to see, is anybody listening and paying attention. And so if you've not done so, we really appreciate you going on and leaving us a review, leaving some comment, because it definitely helps us do our job, which is bringing you quality guests. This review today was from Nick G335 via the Apple podcast. He says, Eric and Steven deliver tremendous value on every episode. As an investor, I am always looking to expand my knowledge of the various markets, trends, and strategies. There is always a valuable takeaway from each episode. Keep up the good work, guys. I wish you even more success in the future. Very, very nice comment there, Nick. Appreciate that. What do you think, Steven? You like Nick now? Yeah,
I totally agree. I mean, I think, listen, just to give you an example, how guests check us out. I mean, I actually called. I was talking to someone. I left them a message. They called me back. They knew where I lived because they wanted to check me out before they spoke. And we're not just interested in just guests. We want really high quality guests, because that's how we all benefit and learn.
Absolutely. Steven, anything else we get rolling into our guest? Oh, and just one more thing. If you've not left us a review, please do so.
Yes, because our guests look at the reviews. Thank you. Today we have with us Viktor Jiracek. Viktor has an interesting business. He's a fix and flipper out of Gainesville, Florida. He did over 20 flips last year, and his goal is 30 for 2021. In some of his flips, he's made up to $64,000 a deal. Although he's done many avenues of real estate investments, including lease options, seller financing, short-term rentals, and long-term rentals, his passion is flipping houses and teaching others how to do the same. In Viktor's free time, he enjoys to travel, and he has been to over 38 countries. So, Viktor, we're looking forward to learning about how to flip homes. Welcome to the Invest Florida Show.
Absolutely. I appreciate y'all having me on.
No, Victor, we really appreciate the time that you're investing with us today. Why don't you start from a 30,000 foot level? I mean, you've got an interesting background. You've traveled around a little bit. How did you end up in real estate?
Sure. So, real estate was always in the back of my mind. It was always like, I want to do this and then get into real estate, or I want to, do this and, get into real estate. So it was always long term. I want to get into it. And basically I was working a job where it was kind of a corporate job as an administrator for a home health company, home health agency. And just realized like, this isn't for me for a number of reasons. Like, I didn't feel like I was earning enough, to really enjoy it. And it clicked for me one day, like, hey, instead of putting off this real estate dream, like, why don't I just go for it? It's been on my mind for so long, let's just do it. And that's what happened. I started wholesaling and did 2 wholesale deals, made $3,000 on the first one, $3,500 on the second one. And then, got into fix and flipping. I've, stuck around with the fix and flip. And I've tried a ton of stuff since then, but just really enjoy the fix and flip. So, it's just exciting to do what you enjoy. So that's pretty much the story of how I got into it.
So, Victor, what made you choose Gainesville as a place to start off doing this business?
Yeah, sure. So my brother was, and it still is actually, working on his PhD here in Gainesville. And from right around the time I decided, like, hey, I want to go full-time real estate, he basically, offered me a place to stay, like, hey, you can stay with me for free for a couple months. I was like, okay, I took him up on that offer, especially as I was trying to get my feet up with real estate. And I just liked Gainesville so much and started to get some traction here in the local market. So I just decided to stay. And, here we are today.
Yeah, Gainesville's a town that's undergoing just tremendous change. Why don't you, and how long have you been in Gainesville for?
So I think I moved here like August 2018. So it's been about 3 years. Yeah, been about 3 years.
Yeah, I started school there in 1983. And
cool.
All that southwest corridor down there, Southwest 23rd Terrace area, was just being built when I was in school, and those are now kind of old, right? I mean, those are kind of older units down there. So I'm curious, and I mean, look, there's been so much that's happened there. University of Florida continues to grow. It's a university town, and that's what's driving the market. Why don't you talk to us about what you've seen happen over the last few years, and give us a view of like what's happening in the market? Yeah, so it's definitely growing. All of real estate's booming right now, but there's a lot of growth here. There's like a lot of student apartments, a lot of construction. There's a lot of money being thrown into the city, and it's a growing city and growing wages and growing jobs. So everything looks good. Overall, like we've seen, definitely, I'm more on the residential side of things, and definitely it's been a hot market. It's starting to cool down a little bit. I also see that continuing into 2022. But, with where we're at, it is, kind of a cooling market, and it's still hot, definitely a seller's market, but it's definitely slowing down a little bit. I honestly see that as a good thing, just because it's been a little crazy here recently. I think it peaked back like June here recently, and it got, lowest inventory, highest demand. So it's kind of nice to get somewhat back to a normal market, but, honestly, we're pretty far away from that, but at least, a trend towards normalcy is well, I'm happy for it. I'll put it that way.
So what are the signs that you look for that tell you that the market's slowing down?
So I look at basically 2 things. So just supply and demand. So basic economics. So supply is, active inventory. So how many homes are for sale on the market? And there's a couple of cool online tracking things for that sort of thing. So I just keep track of that. And again, like the lowest inventory was back in like May or June. It's kind of popped up a little bit, not too much, but popped up a little bit since there. And then the other thing I look at is demand. And the biggest thing with demand, there's a lot that goes into it, but the biggest thing that I've seen is like interest rates. So debt gets cheaper. People want to buy a house because it's so cheap. Why not? Especially if they're giving away money at the rates they are recently. So that's pretty much it. So look at those 2 things. I watch both of those things. Watch forecasts and trends and try to predict as best I can. I think the biggest thing is like, yes, you can make these predictions. I think the other thing is, as long as you're buying right and buying for the right price, anything can happen in the market and you're still good.
Are you still seeing, because I know this is the situation in most of the major markets still in Florida, are you still seeing 3, 4, 5 offers on the first day that a listing comes live, or is that sort of cooled down a little bit?
That's cooled down. We still see that. So if it's a good property and good neighborhood, priced right, then yeah, for sure. We also fix and flip. We do houses, mobile homes, townhomes, condos, all that stuff. especially for, let's call it like maybe less popular things, like maybe a mobile home. Like they're definitely popular, but maybe less interest on it, I'd say, just because it's a mobile home. Those typically take a little bit longer, but a little bit longer meaning like in 2-3 days we have a full asking price offer. It has been hot, but it hasn't been that hot. I've heard of places like Tampa, like 10, 12 offers first day. It's nothing like that. It's not that crazy.
Gotcha.
Is there still a growing a surging population like we have in other parts of Florida, in Gainesville?
I'd say yeah, and a lot of, I'd say at least half of my last people I've sold to, I buy a place, fix it up, and sell it. That end buyer, I'd say at least half of them like out of state, from California or New York or something like that. So it's not only like ingrown population growing, like existing population, native population, I'll put it that way. It's also people coming in to Florida and Gainesville.
So all investors have sort of a back of the napkin, quick calculation of what kind of a deal makes sense to them. I mean, it could be the 2% rule or 1%. It's hard. I mean, it's hard in Florida to find 2% deals unless you're dealing with a mobile home. But, like what kind of a quick down dirty calculation are you using to determine whether that's a good deal for you or not?
So definitely for rentals, 1% rule, that's still a standard. For fix and flip, we do 70% rule is what it's called. So it's 70% ARV minus repairs.
ARV is a after repair value. Yep.
After repaired value, exactly. Like what's the retail price? Like once you fix it all up like you want to, what can you sell the place for? That's important. And that's basically what we looked at. So quick example, like let's say 100K ARV, that's what you can sell it for. 10,000 repairs. So it's 100,000 times 0.7 minus 10. So your max offer is 60. So let's say someone offers you the place for 50,000. Take it immediately. If someone offers you the place for 80,000, then it's not so much a good deal.
Gotcha. Yeah, because always when you start peeling back the onion, you're going to find problems with the property. So you want a little bit of cushion in there. I assume that's why you're calculating it that way, correct?
Exactly. So it inputs all your numbers there. And again, just like you said, you want a quick rule of thumb. There's a million variables when it comes to flipping houses or real estate in general. Like what's the neighborhood? What's the bedrooms, bathrooms? Is it a private road? Is it a dirt road? Is it a public road? Like there's so many variables. So you just need a quick, hey, 10 seconds, 30 seconds. Yes, this is a deal. Yes, this is, or no, this isn't a deal. Just to see if it's worthwhile to pursue.
Yeah, and so for people who may not be familiar, could you just define when you spoke about the 1% and 2% rule?
Yeah, for sure. So those are more for rentals. So for rentals, like your biggest goal with rentals is cash flow and like rent income. Like so you want to put some money in. It's the basis of investing. So you want to put some money in, and then slowly over time you'll get money out in the form of rent. So typically for 1% rule, so what that means is if it's renting out for $1,000 a month, you could pay $100,000 for it. Or if it's renting out for $1,500 a month, you could pay, $150,000 for it. So that's 1% rule. 2% rule is just a slight change off of that. So if it's renting out for $1,000 a month, you want it for $50,000 basically. So that's 2% rule. So again, it's another quick formula for gauging a rental. Because again, there's so many variables when it comes to rentals. Like, is it on a good street? What about the school district? But it's quick and dirty. Like, boom, I can get $1,000 a month for it. I'm paying $100,000 all day.
So, can you tell us how you find the properties? Because part of the problem now is all sellers are just inundated. Every realtor's writing letters, and dropping cards and sending all kinds of things. And there's a lot of competition. And what's happened is, I think a lot of sellers or homeowners they just toss it out. Yeah.
So how I've been typically getting my deals. So I'm on track for about 30 flips this year. Only one has been MLS, like MLS on market, Zillow, Realtor.com, like everyone sees it. So I mentioned to your listeners, like it's best if you do what's called off market. So you go direct to seller. You go directly to the homeowner and, talk to them. So there's no middleman, no commission, nothing like that. It's just direct to the seller. And I've seen a lot of success with that. So no auctions, nothing like that.
So just one question. So like you have to go direct and talk to the sellers. You have to have a good personality. I'm asking the question because then I think maybe Eric shouldn't be doing this kind of work.
Eric should be sitting here with you. I mean, that's the reality situation, but he is.
I don't know if it's so much, personality. I think the biggest thing is when it comes to that, it's probably connection, just understanding their situation, like why they want to sell, when they want to sell, making sure you can solve a problem for it. Like I wouldn't say I have the best personality. Like I'm not the most outgoing. I'm more introverted, to be honest. But I'm still out here getting deals. So that's what I'd probably look at is, just wanting to provide genuine value and genuinely helping them out. It's probably the biggest metric of success. And honestly, I'd say I've had a lot of success where you just let the seller talk, you let the other person do the talking. So they do 80% of the talking, you do 20% of the talking. And I've seen a lot more success like that. And you just kind of give them space to tell their story and give them space to explain the situation. I've seen a lot better than that. So I would even say, good personality or great personality might be a hindrance where you're doing all the talking. You're the one kind of showing off, if that makes sense. And, let them share their story and pull out the emotion.
So are you doing mostly letters, or how are you getting those first contacts with folks?
Yeah, I actually don't do any direct mail letters. I actually don't even recommend that for beginners. Don't get me wrong. There's nothing wrong with direct mail, but it just takes some time. It's so competitive, and you have to be sending out, thousands of letters or postcards every month to get a deal. So especially for a beginner, like if they got to spend a couple of grand a month, and it might take a couple of months, that's pretty large ask for a beginner. I'm talking brand new real estate investors. So for me, I work with a lot of wholesalers. That's worked out great for me. I do cold calling. Cold calling still works. It's always going to work. I have a website. I get some leads from the website, like SEO, do a little bit of driving for dollars. So a little bit of everything, but we're getting deals consistently.
Gotcha. So are you doing enough the fix and flips right now to maintain your own crew, or what are you doing about the trade side of your business? Because we're just having the worst time imaginable trying to get people on the job and stay on a job when we've got construction work that has to be done.
So we've been just using a lot of subs. So that's typically how we do it. Like a flooring guy does the flooring, painter does the painting, electrician does the electrical. So I don't think I'm at a place where I want to have a crew where I have, 3 people paying them, whatever, $20 an hour, $15 an hour. The other thing is it's kind of inconsistent with our deals. So some months we might get 2 deals, some months we might get 0. This last month I bought 8 different properties. So it's kind of inconsistent. So I don't think I'm quite there for the crew. So I've been pretty happy with just subcontractors. Are
you having problems getting subcontractors to come out and work with you, and what about the pricing?
It's been trickier. It's been more difficult recently. Everyone's so busy. Everyone's like, oh, we're 2 to 3 weeks out, or we're a couple months out. So that does make it tough. How I see it is it's the same with, marketing and sales and getting deals. It's the same with contractors. It's kind of like a funnel. So let's say you call 20 people, 10 people answer, 3 people come out for a quote and you pick one of those quotes. So that's how I see it. And I see a lot of beginners make the mistake. They talk to 2 people and one guy says I can't do it. I'm a couple months out. The other guy says, oh, I'm a couple weeks out. And they're like, oh, well, I guess there's nobody out there. But I see it as like a funnel where you got to put in the work. Just like your marketing and sales to get deals, you got to market and sale to get contractors, which didn't used to be the case, but that's the market we're in. And then, prices have definitely gone up for the trades and for the work. We've seen honestly that gets offset with selling the property. We just sell the property for a little bit more, and it just offsets that. Just because there is a shortage for pretty much everything. So that's just been about where it is before.
And then how do you market your properties? Do you put them on MLS, or do you work with other brokers? How do you get them? How do you sell them?
We just typically do MLS. Luckily, the market's hot, so it goes pretty good, goes pretty quick if you have a good property. So that's kind of my 2 cents there. Once the market slows down, maybe we'll just look into some other marketing techniques. But honestly, just putting it out on the MLS has been our best bet.
Tell me what areas in Gainesville you really like that are fruitful for you.
So with Gainesville, we do all of Alachua County. So it's Hawthorne, Archer, High Springs, Alachua. We do all of Alachua County. So as long as the numbers work, we are jumping in on it. We are going to do the deal. Overall, if I can pick a place, where to do deals, Northwest is really good. Northwest is really hot. So we've seen a lot of success there. Just people want to live in the Northwest. So definitely for flips. If I can choose a place and the numbers are the same, that's just been the highest demand area for us. A bit of Southwest if you go farther out. It's like more the new construction is, but not like very, very close southwest. So that's preferable. That's desirable. I'm honestly pretty neighborhood agnostic. So as long as the numbers work, I'm doing the deal.
Talk to us about your best deal and your worst deal.
Yeah. So let's talk about worst deal. Just to put the best deal in context. I don't want you guys to think I'm always winning over here. Before I get into it, that's what I've noticed too. Like, some deals, you kind of have a baseline. And for me, on average, it's about 30, 35K net profit, which is great. Happy about that number. But some deals do better, some deals do worse. But on average, over a set of, let's say, 10 deals, like we're making on average that number. So it just makes you feel better because sometimes you're like, oh, I should have done that deal, or this deal's nightmare. And then you get through with it and you get very lucky on another deal, so to speak. So worst deal. So we bought a property. It didn't need a lot of work. It basically needed a new roof. So we bought it for $87,000. We put in like 10 to 15, and we were going to sell it for 140. So we listed it, put it under contract, did all the stuff, and then suddenly it didn't appraise. So the appraiser was sent out there. We had it for 140 under contract. It appraised for 109, so like 30,000 less, and that's never happened to me, to that level. It's been maybe a couple thousand low appraisal, but nothing to that extent. So especially with that property, we were our best bet was FHA. So basically what we decided to do is we decided to rent it out. Like, hey, we got to wait for FHA, because I was told there's a rule with FHA. It's like 6 months, the appraisal sticks to the property, something like that. So we couldn't just list it again. So basically what we did, we rented it out, and it was cash flowing, $300, $400 a month. And then, 6 months later, the tenant eventually moved out, and we sold the place. So on that one, we broke even because we had to refinance and some other stuff. But yeah, so we eventually sold that one. So that was the worst one. So break even isn't terrible. I think we were in that deal, 9 months, 12 months. So break even, so kind of got our money in, put our money in, got our money out, which isn't terrible, but it was a lot of hassle. But it also built confidence in me, because worst case, just turn it into a rental. And our worst case scenario was a cash flowing $300, $400 a month, which isn't that bad. So that was my worst deal.
Yeah, if you're still making money.
Yes. Yeah. You won't go broke taking a profit. And that's what we went through. So that was the worst deal, which is too bad in my opinion. Our best deal, that was a deal we almost didn't do. So basically what happened is we got this deal through a wholesaler. Closed. We knew initially there was a mold issue. We thought it was very minor. Like, we're just like, boom, take care of it. Shouldn't be a problem. It turned out to be much worse than we thought. So we had to get a mold remediation company in there, which we basically did. And our first quote came in like $23,000. Like, they're going to do mold remediation for $23,000. And at that point, we're like, whoa, that's way more than we expected. We were thinking like, hey, we got plenty of other properties, other deals going on. We don't have to do this one. We talked to the neighbor, because the neighbor was kind of in a bidding war, or, was also interested in the house as we were trying to buy it. And we basically talked to him and said, hey, we are willing to sell this property to you at break even. Are you interested? And luckily he said no, because we would have been happy to break even and move on. And luckily we didn't, because then we got a couple other quotes in for the mold remediation, and I think we ended up getting it done for $7,000-8,000. It's like, okay, cool, that's a lot better. And then we finished the renovation, sold the place, and we made like $64K net profit on that one. So
wow.
Glad we didn't sell it. Glad we didn't panic sell it, fire sale it, because that would have been $64K we would have missed out on.
So the methods that you use, are they, Florida's so many different areas and different neighborhoods. Would you say your methods are pretty general and could be applicable across different areas, or do you think they're more specific to your work area?
I'd say they're applicable everywhere, honestly, because real estate's real estate wherever you go. It's four walls and a roof is a house here, and in Tampa it's 4 walls and a roof, and in Alaska, it's 4 walls and a roof make a house. So it's the same basics and the same fundamentals. We're buying low, we're selling high. So, that's where we're at. I'd see the other thing is there's a lot of success here in like secondary markets or smaller, more rural markets. So we did a mobile home here, and the population of the city was like 5,000, and we listed it. And this was 6 months ago. We had like multiple offers on the first couple of days. So I see the rural stuff really winning out. When I started out, I was doing cold calling in like Miami. That's the first market I started in before I went to Gainesville. I was cold calling. It's like 8 a.m. And, I asked the seller, call them up like, hey, you want to sell? They're like, no, I appreciate you calling. You're the fifth person who's called me today. It's 8 a.m.
Wow.
And that just goes to show for Miami how hot of a market it was. And, I switched over to Gainesville. It's a lot less hot of a market. So, I see Gainesville as being a positive. Like these smaller markets are really winning out where you can still get deals, like you can still get contractors, you can still get everything done. Basically, where if I were in Miami, like there's no way I'd be this successful, no way I'd be flipping this many houses.
Yeah, I hear you. Why don't you tell us a little bit, because I've heard some horror stories when I'm speaking to sellers. What are some of the worst mistakes that you know of buyers, wholesalers, flippers make when they're communicating with a seller? Because obviously many times you're asking for that person to sell the house at a discount, and there's some pain associated with that. But they're in a bind, so they're needing some assistance. So what are some of the worst things you've heard, or maybe some advice that you could give to somebody to make sure they don't step in it when they're talking with a seller?
Yeah, I think the biggest thing is more of a process piece of advice. So especially when you're doing this process, like on average, it takes me 10 follow-up attempts to get a deal. So it's pretty rare on the first sit down where it's me and the seller talking. They're like, yep, I'll accept that low price. Awesome, let's do it. Like that doesn't happen. It happens sometimes, but rarely happens. So it takes 10 follow-up attempts, like 10 touches. And that can be a text, that can be a phone call, that can be a voicemail, that can be an email. Maybe I saw them in person. But that's a mistake I see a lot of beginners make, especially like they're getting into this, like, oh, well, they rejected my offer on the first time. I guess I'll never talk to them again. It's like, no. You got to follow up with them, and you got to keep in touch with them. If you've ever been a motivated seller yourself, or you kind of understand the psychology a little bit, a lot of people think of sellers as kind of a static thing. So if you offer, let's say, $100,000 for a property today, and you ask them in a month, like, hey, would you take $100,000? A lot of people assume like they're going to have the same answer. Like they're going to say no now, and they're going to say no in the future. And that's not necessarily true. Just because if they're motivated, like that pain might be pushing them to take action and pushing them to do something with the property. So if you ask them today if they would take $100,000, they might say no. But if you ask them in a month, they might say yes, just because maybe the circumstances have changed, or maybe they're just more fed up with the property, or there's something going on. So I've had a property, like this was years and years ago. It was a property. I basically got into it. I just wanted to sell. I just wanted to get out of it. And that's how I said. Like at first I wanted top dollar, and then slowly reality set in. I'm like, I'm not going to get top dollar. And eventually for that property, I just broke even and was happy to get out, get my initial investment and move on. So that's my recommendation for folks, like that follow-up, fortune's in the follow-up. But it might take, a month or a couple months to get a deal, but it's worth it in the end.
So, Viktor, if people want to contact you and learn a little bit more, or work with you, or have some deals with you,
have a deal.
How can they reach you?
Yeah, for sure. So I'm most active on Facebook. So Viktor Jiracek, you can just look up my name. I'm pretty unique with my name, so you'll find me right away. I also, I do these where I, do deals myself, but I also mentor people how to do deals, or if folks want to partner up, they should hit me up there. I also have a free Facebook group called Six Figure House Flipper, so they can, reach out there and connect there. And I post there pretty frequently, and resources, tips, share some flips that I'm doing. But that's pretty much it. I'm most active on Facebook, so if folks want to reach out, that's the way to get a hold of me.
Viktor, any other words of wisdom before we let you go today?
I think the biggest thing, there's so much value in getting started. So I had a mentor recommended me to get started in real estate 5-6 years ago. So obviously didn't listen, but eventually got started 3 years ago. And a lot of people assume that their growth is going to be linear when it comes to this sort of stuff. Like, I'll do 1 my first year, then 2, and then 3. And that's not what I've seen. So for me, I've seen my first year to 2, and then 8, and then 20, and then this year's 30. So who knows where I would have been if I got started 5 years ago. I might be doing 50 a year, whatever. I might have been in a totally different place. So there's so much value in getting started now, just because it's going to really compound and become something that you would have never imagined in a positive way. So that's my biggest tip there.
Awesome. Good advice. Stephen, anything else before we let Viktor go?
No, Victor. Well, I just had one quick question, which is just a question of taxes. Do you see any value in holding properties and flipping after a year so you can do the capital gains tax, or do you flip most of yours on a shorter time frame?
I do see value in it. I recommend it for folks like do a flip, do a rental, do a flip, do a rental. Every time you do a flip, you'll make some amount of money, and you can use that capital as a down payment into a rental. And then the rentals have great tax benefits, so you kind of offset your tax base. That's what I've been doing a lot more recently. So, it's great to do flips and see those big checks, but it's also cool to have a small check long term, a small check every month. So I think it's great. How I see flipping, it's not the end all be all. It's just a tool in the tool belt. So if I were a contractor and I would say like, hey, hammers are the best. I use hammers for everything. You'd look at me weird, right? Because sometimes you use a hammer, sometimes you use a screwdriver, sometimes you use a saw. But it's all a tool in the tool belt, and you just need to know like what tool to use what.
Good stuff. Really appreciate the insight today. Stephen, is that your last? Are you done with all the questions now? We can let Viktor go back to making money.
Questions. I'm going to go out and look for something to flip now.
All right,
Viktor's inspired me.
There we go.
All right,
I
Viktor.
appreciate it.
Thanks so much, sir.
Thanks for having me.
And that was Viktor Jiracek talking the Gainesville market, a place that's near and dear to my heart. Stephen, what were your thoughts?
So Nick G left us a very nice review that he said there's always an interesting takeaway, but I thought that we really did get a good takeaway from Viktor, which is something I hadn't really thought about. We're so focused on marketing to our clients when we're selling things, and Viktor spoke about marketing to your vendors, like really playing it out and getting the best turnaround time and the best prices, and what a difference it makes, and that one thing can make a deal work.
It's something you have to take into consideration when you're buying a property that needs some work with some deferred maintenance. It's the costs have skyrocketed, both from materials cost and from labor costs. And so Viktor makes a good point of trying to go out and form those relationships with those vendors and try to keep a stable of them, because they're busy. Number one, they're backed up. Number two, number three, it's just there's a shortage. I mean, we're not getting enough folks in the trades, and we've had a backup. In the real estate business, COVID put the crimp on it. And then, of course, people are moving to Florida now after the COVID veil is starting to lift a little bit here. So good advice from Viktor. And Viktor was a great guest, Stephen. What about other great guests?
So the place to go is go to our website, www.investfloridashow.com. We now have an archive going back, what's it, Eric, 5 or 6 years?
5 or 6 years was like 5 or 6 years before that, Stephen. It's been like 8 years
now. Is it 8 years? Wow, it's a long time. And so we've just got a wealth of knowledge and really interesting people. So go to our archives, but more important, listen to it while you're mobile. Put it on, there's apps to put on your phone, and while you're in the gym or driving, learn something from our guests.
Guys, as always, we appreciate the time that you invest with us each and every episode. And until next time, hasta la vista.
You've just listened to the Invest Florida podcast with Eric Odom and Stephen Silverman. Join us every week for actionable real estate investment ideas, and of course, visit our website at www.investfloridashow.com for more shows and tips on how to earn a cash flow in the real estate market in Florida. While hosts and producers of the Invest Florida show have no reason to doubt the validity of comments of our guests, we do not warranty their accuracy. Please check with your legal, financial, and tax advisors before entering into any investment. Returns will vary from person to person and deal to deal based on unique circumstances. All information expressed in this show is for educational purposes only. Opinions of the guests are not necessarily shared by the hosts and producers of the Invest Florida show.